In video 1, I showed you why the lower priced, higher volume model can be a better business. Now we need to talk about the change that makes it possible. You have to stop being the doer of every bookkeeping step. You have to become the orchestrator of the system that produces the books. That sounds simple. It is a major identity change for an accountant or a bookkeeper. Most of us learn to measure a productive day by the work we personally completed. How many transactions did I clear? How many bank reconciliations did I finish? How many reports did I prepare? How many client emails did I answer? Those activities gave us proof that we were working. In the firm I am teaching you to build, your workday looks different. You check whether the transaction rules and AI did their jobs. You review the small number of transactions that remain. You see whether statements arrived. You find out whether the reconciliations moved forward. You check whether the client answered the request. You repair a connection that stopped working. You improve an instruction so the same exception does not return tomorrow. You spend less time performing the steps. You spend more time making the whole system work. That becomes your secret sauce. The small business owner can buy software. The owner can open an AI chat. That does not give the owner a working bookkeeping system. The owner does not know which tools to connect. The owner does not know which source should control. The owner may not recognize that a bank connection stopped importing. The owner may not know why payroll does not match the ledger. The owner often cannot look at the finished financial statements and tell whether the result makes sense. You can. Your value moves into system design, review, judgment, communication, and accountability. You become the organizer. You become the pipe fitter. You become the person who can look at the evidence and tell the client whether the books are supportable. Think about a general contractor building a house. The contractor does not personally pour every section of concrete, pull every wire, install every pipe, and paint every wall. The contractor understands how the pieces fit. The contractor knows which work must happen first. The contractor checks whether one trade created a problem for the next one. The contractor remains responsible for getting the house finished. That is closer to your new role. The bank connection, transaction rules, client requests, payroll system, reconciliations, reports, and communication tools all have to work together. The agents move work through those systems. You make sure the handoffs work and the accounting result is right. The client does not need you to hold every hammer. The client needs you to deliver the finished house. Let's make this practical. In the old model, you open every company to see what needs attention. In the new model, you open one firm-wide view. It tells you which companies need a person. You go directly to those companies. In the old model, you clear routine transactions. In the new model, rules, tally, and agents handle the ordinary activity. You review the spotty transactions that remain in the morning. In the old model, you chase every statement and every document. In the new model, the system knows what should arrive. It asks for what is missing. It reminds the client. You see the requests that failed or the clients who still have not responded. In the old model, you perform every reconciliation step. In the new model, you watch the reconciliation pipeline. You see which accounts are current, which ones are 1 or 2 months behind, and which ones have become urgent. You handle the unusual difference or missing evidence. In the old model, you prepare reports and try to remember who received them. In the new model, you see the report calendar. You know what was sent, what is scheduled, what failed, and why a company has not received its reports. In the old model, a process lives in your memory. In the new model, you turn that process into instructions. You test it. You give it to an agent. When the agent finds a situation you did not anticipate, you improve the process. Your task list becomes a control system for the firm. That is how one owner can supervise 200 companies without personally opening 200 files every day. Picture a normal morning. You start with the firm view. Tally handled thousands of ordinary decisions while you were doing something else. Grokbot checked the systems that sit around the books. You see 8 transactions that need judgment. 3 companies are waiting on statements. 2 clients answered yesterday's questions. 1 payroll does not tie to the bank withdrawal. 4 reports were delivered, and 1 report is held because the reconciliation is behind. That is your morning list. You do not spend an hour proving that the other 190 companies are quiet. The systems did that monitoring. You spend your attention where it has value. As you clear those items, the companies continue moving. A statement arrives and triggers the next reconciliation step. A client answer resolves a coding question. The held report becomes ready. Your work is directing flow, not manually dragging every company through every step. Here's how I expect the owner's time to work in this model. About 20% goes into sales and marketing. You still need to find clients. You need to explain the offer. You need to talk with prospects. You need to build relationships and keep the pipeline moving. About 10% goes into running your own firm. You have bills to pay. You monitor cash flow. You handle subscription issues. Your clients should be on monthly automatic payments, but credit cards expire. Payments fail. A bot can handle most of the follow-up, and you will still have some firm administration. The other 70% goes into monitoring agents and improving the plumbing. You are going to hear me use the words bot and agent. For our purposes here, they mean the same thing. They are AI workers operating within instructions and connected tools. You check what those workers did. You see where a process slowed down. You find the step that required a human. You decide whether that step should remain human. You improve the instruction. You reconnect a tool. You change a handoff. You make the next run better. You will never finish refining the system. Every day you will find something that can be improved. A request could be clearer. A report could arrive sooner. A bot could bring back a better summary. An exception could go to a more useful queue. A company could move through the monthly work with 1 fewer human touch. That is your job. You are building an increasingly efficient production system for bookkeeping. The important part is that you do not treat every exception as another task to complete and forget. An exception is information about the system. If a client answered the same confusing question 3 months in a row, the instruction may be unclear. If an agent keeps bringing you the same kind of transaction, the company rule may need to improve. If a report repeatedly waits on one document, the request may need to go out earlier. If a bank connection fails and nobody notices for 10 days, the monitoring pipeline is the problem. Fix the work in front of you. Then ask how to keep the same problem from returning across 200 companies. That habit is how the owner gains capacity every month. This is also why the owner needs to understand the tools. You do not need to become a software engineer. You do need to know where the information comes from, which system is allowed to change it, and what should happen after the change. When something fails, you should be able to ask useful questions. Did the bank connection stop? Did the statement arrive? Did the client receive the request? Did the payroll report cover the same dates as the bank withdrawal? Did the agent lack permission? Or did the instruction fail to explain the result? That knowledge becomes the competitive advantage of the accounting firm. The business owner does not want to become an expert in this plumbing. You do. You can build it once and use it across 200 companies. There is one thing I do not want you to misunderstand. AI does not make quality automatic. An agent can follow a bad process. It can receive incomplete information. It can misunderstand an unusual transaction. It can produce an answer that sounds confident and still needs correction. That is why the accountant remains important. You decide what evidence the process needs. You decide where an agent can act and where it should stop. You review unusual items. You look at the financial result. You decide whether the books make sense. We are reducing repetitive human work. We are keeping professional judgment where it belongs. Your client cannot get that simply by buying software. The client is buying completed books, a relationship, professional oversight, and access to someone who understands the accounting. That is the human part of the offer. Your review should also become more useful as the routine work moves away from you. When people spend the entire day clearing transactions, fatigue sets in. The review can become another box to check. The person who prepared the work may be the same person trying to decide whether the final result is reasonable. The orchestrator has a different perspective. You can look across the company. Does revenue fit what the owner told you? Does payroll look normal? Did a loan balance move in a way that makes sense? Is the reconciliation current? Is there a large, unusual transaction that deserves a question? AI gives you the capacity to apply judgment at the point where judgment is valuable. That is how lower human effort can coexist with strong professional oversight. Now we get to the hardest operating problem. AI will expose your chaos. This is not only a problem in firms with employees. Many of you are one-person firms. Some of you have 3 people or 5 people. The number of people is not the main issue. The issue is the lack of standardization across the book of business. One client comes in and asks to have the work done one way. You say yes, the next client wants a different report. You say yes. Another client wants to send information through email. Another uses a spreadsheet. Another sends text messages. Another wants a meeting every week. Another expects reports on the 5th day of the month. Someone else never provides information until you call. Before long, you do not have one bookkeeping firm. You have dozens of little bookkeeping firms. Each client has a different deliverable, a different communication process, a different way of providing information, and a different schedule. This complexity can hide when the firm is small. You know that one client always emails on Friday. You remember that another client wants a cash basis report. You know who sends the spreadsheet and which column matters. You remember that one owner will not answer email, but will respond to a text. The system appears to work because your memory is holding it together. Add 50 more clients and that memory becomes the bottleneck. Add an agent and the hidden rules suddenly have to become instructions. The firm discovers that there was never one process to teach. Bookkeepers have been trained to see that as service. The client asked, and we accommodated the client. It feels helpful at the beginning. It becomes impossible to scale. You cannot train an agent to run 100 different versions of the same engagement and expect a clean operating system. You cannot build a reliable routine when the definition of done changes by company. The agent may look inconsistent because the firm is inconsistent. If you hold on to every custom workflow, you might as well throw away the system I am teaching. The technology cannot give you volume while you insist on bespoke delivery for every client. Standardization has to become the first thing you think about, the second thing you think about, and the third thing you think about whenever you work on the firm. Start by inventorying the variation. Write down every way clients send information. List every report you deliver. List the different deadlines you have promised. Look at recurring meetings, spreadsheets, receipt processes, payroll steps, and client reminders. Then ask which differences exist because the company is different and which ones exist because somebody asked once and the firm never reconsidered the request. A construction company and a consultant may need different accounting rules. That does not mean they need different communication systems, different report delivery tracking, or completely different monthly workflows. Standardization does not mean pretending every business is identical. It means keeping the operating path consistent wherever the accounting does not require a difference. That distinction gives agents clear instructions without removing your professional judgment. I call these workflows the plumbing of the firm. You can call them pipelines. You can call them systems. The label does not matter. What matters is that the work has one clear path. How does information come in? What happens when it arrives? Which work does the software perform? What causes an item to come to you? How does the client receive the finished result? What happens when any part of that process fails? Those questions become the owner's main focus. Your firm may use a practice management system for client communication. You may use email. You may use Ledger HQ. I am not going to tell every firm that there is one universal tool. You need to pick the path that works for you and teach your clients to use it. If one client submits a spreadsheet every month and another does not, ask why. Is that spreadsheet necessary for every company? If it is, build it into the standard workflow. Are the companies without the spreadsheet missing something important? Then fix that. Is the spreadsheet extra work that nobody needs? Stop asking for it. The same thinking applies to receipts. I'm not giving you a universal receipt policy in this course. I am asking you to examine the work. Bookkeepers have spent decades trying to match every receipt to every transaction. In a world with digital bank and card records, much of that activity may not belong in a $200 monthly service. The client can photograph receipts and keep them. If an audit happens later, the client can work through those records or hire the firm for separate help. The monthly bookkeeping fee does not quietly include unlimited audit preparation for every transaction across several years. The lesson is simple. Question every step. Keep the work that produces the result your standard client needs. Build one path for that work, then make the path visible. You should be able to look at every company and see where it is. Green means the reconciliations follow closely with the current month. Orange means the company has fallen 1 or 2 months behind and needs an identified next step. A company that is more than 4 months behind is red and requires concentrated attention. The color is not the system. The color tells you whether the system is moving. Underneath it, you need the reason. Is a statement missing? Is the bank disconnected? Is a client answer outstanding? Is there cleanup that the standard process cannot resolve? One pipeline lets you compare the whole book of business. You stop discovering that a company is behind when the client asks for a report. You know while there is still time to fix it. Clients will ask for exceptions. You do not have to tell every existing client that the relationship is over. Give the client a choice. I can charge you $150 a month when we do the bookkeeping this way. We use this communication method. Information follows this path. The monthly work follows this schedule. You receive these reports. The software and agents can carry most of the work because the process is standard. If you need the work done your own custom way, I can do that. The price may be 3 times as much. That price pays for the additional human coordination. It pays for the special schedule, the unusual communication, the custom deliverable, and the process that cannot move through the normal system. You may be surprised by how quickly small business owners change their ways when changing saves them money. Many clients will gladly use your standard process when the alternative costs an additional $300 every month. That gives the owner control of the firm again. You can keep current clients at the fees they already pay when they are happy with the service. You do not need to call everyone and volunteer a price reduction. When you build the new model, you can invite existing clients into the standard process. New clients enter through the standard process from the beginning. The price reinforces the behavior that makes the system scalable. You need to protect that standard during the sales process. The easiest time to create chaos is when you want the prospect to say yes. The owner asks for one special item. You agree because the engagement is new. Then the next prospect asks for something else. 6 months later, the service you designed no longer exists. Explain the benefit of the standard instead. This is how we keep the price low. This is how we make sure your work moves every month. This is how we know when something is missing. This is how we can answer you quickly because the information is in the right place. The standard process is part of the value proposition. It is not an apology. When a custom request has enough value to justify the higher price, sell it at the higher price. When it does not, let the standard protect the firm. Let me show you what I mean by a pipeline. Bank connections go down all the time. If you have done bookkeeping for any amount of time, you know what happens. The bank stops sending transactions. The accountant notices. You contact the client. The client does not know how to reconnect the account inside the accounting software. You schedule a call. The bank sends a secondary authentication code. The client has to read it to you or take control of the screen. Something expires. You start again. Do that 20 times a month, and it becomes a major part of someone's job. In Ledger HQ, we built a different process. When the bank connection goes down, the software detects it. The client receives a text message with a secure link. The client clicks the link and signs into the bank. Most clients know how to do that. They log into their bank several times a week. They understand the bank's password and authentication process better than they understand a reconnect screen buried inside accounting software. Once the client completes the connection, Ledger HQ looks for new transactions. It separates those from transactions that are already in the books and brings in the new activity. The accountant does not need to get involved unless the client cannot complete the bank login, or the connection still has a problem. That is orchestration. The accountant understood the problem. We built the workflow. The system detects the event, contacts the right person, completes the routine steps, and brings a surviving exception to the accountant. Now imagine that same thinking across the firm. A statement is missing. The system asks for it. A client has not answered a bookkeeping question. The system reminds the client and tells you what remains unanswered. A payroll is processed in Gusto. A bot compares the payroll report, the bank withdrawal, and the entry in Ledger HQ. A report is due. The system sends it and records the delivery. A company falls 2 months behind. The firm pipeline changes the company from green to orange and shows you why. The owner stops carrying these facts in memory. The plumbing carries them. That changes client communication too. The agent should be able to tell you what new requests went out, what replies came in, what was sent again, and which company is still waiting. You should not have to search email and reconstruct the conversation before calling the client. When you do call, you have the full picture. You can say exactly what is missing, why it matters, and what happens after the client provides it. The automation makes the relationship better because your human conversation starts with context. You're not using the call to discover what the firm already should have known. This operating model requires another mind change. Stop being obsessed with hiring people. For 20 years, I have listened to bookkeepers and accountants talk about the next hire as if it were the goal. As soon as I get to this size, I am going to hire someone. As soon as I have enough clients, I will put all that work on an employee. I have hired hundreds of people. I have operated a firm of considerable size. Hiring more people is not an ambition I recommend. Every employee adds cost. Every employee requires training. People require management. Communication becomes more complicated. You need more systems. You have more chances for work to move in different directions. Hiring can also hide an inefficient process. The work becomes overwhelming, so the owner hires a person. The new person inherits the same custom workflows. When that person becomes overwhelmed, the firm hires again. Revenue grows, payroll grows, and the owner now manages a larger version of the original problem. That can create an impressive headcount and a disappointing profit margin. The AI model asks a different question first. Why is this work consuming so much human time? Which steps repeat? Which steps can move through one pipeline? Which decisions need an accountant and which ones exist because the firm has never written a rule? Solve those questions before adding another salary. There is a cultural issue here too. People ask how many employees a firm has because headcount is easy to see. A 20-person firm sounds larger than a 1-person firm. Larger sounds more successful. That says nothing about what the owner keeps. The 20-person firm may have enormous payroll, management problems, office costs, and thin margins. The 1-person firm may create more profit with a cleaner life and fewer moving parts. I care about the business that remains after the bills are paid. I care about whether the owner has created an asset or another expensive job managing people. Use AI to delay headcount, avoid unnecessary headcount, and make every human role count. First, prove what the owner and the system can do together. Sometimes businesses need employees. That is not the question I want you solving right now. Get to 200 clients by yourself before you worry about all that. When someone asks me how many people work for me, I like to say, As few as possible. They ask why. Because I want all the profit. The number of people who work for you is a silly measure of success. Watch your revenue. Watch your profit. Watch how much revenue the firm creates for each human hour. Watch whether one client can damage the business by leaving. Watch how much control you have over your own time. Profit is often a derivative of revenue when the operating system is efficient. If you remove the cost leaks and build a scalable process, more revenue should create more profit. That is the score. Consider two owners who each create $360,000 of annual revenue. One owner built a staff-heavy firm. Payroll, benefits, recruiting, training, management time, and rework consume most of the revenue. The owner spends the week solving personnel problems and keeping custom engagements staffed. The other owner built the standardized AI firm. That owner pays for Ledger HQ, Grok Bot, payment processing, and the other tools required to operate the system. Those are real expenses. They are small compared with the cost of a large bookkeeping staff. The revenue number is the same. The business underneath it is completely different. That is why revenue by itself is not enough. I watch revenue because an efficient system turns additional revenue into profit. If the system has cost leaks, revenue can grow while the owner keeps very little. Your job is to keep the marginal cost of each new standard client low. The software cost may rise by a known amount. Payment processing cost rises with the payment. Your human time should rise very slowly because the new client enters the existing pipeline. When that remains true, adding clients produces profit. When every client creates another set of manual tasks, adding clients produces another hiring conversation. Build the system that makes revenue valuable. I want you asking a better question. How can I run a 200 client firm by myself? That is what I'm going to show you. Let me close by being honest about the destination. 200 clients will require work. You will meet with clients. You will answer questions. You will sell. You will monitor agents. You will repair workflows. You will look at accounting exceptions. Sometimes you will work outside the hours you planned. You are building a business that produces $30,000 a month and $360,000 a year in revenue. You should expect to work at it. The promise is that this firm requires far less human work per client than the old model. It also gives you a business that is easier to understand. You know what every standard client receives. You know how information enters the firm. You know what the agents should complete. You know which exceptions belong with you. You know what the software costs. You can see whether the price produces the margin you expected. That clarity makes growth safer. You are adding another company to a working system. You are not inventing another engagement every time a prospect signs. It also makes the numbers honest. If the firm has 200 clients at $150, monthly revenue is $30,000. If the standard software costs $20 per business, that cost is $4,000 a month before any current promotion. You can identify the other technology costs. You can track your own hours. You can see what remains. The model does not depend on pretending the tools are free. It depends on the tools costing far less than the human labor they replace. That is why I want you focused on revenue and profit. Track the real numbers. Improve the system. Keep the cost leaks from growing with the client count. If you only have 15 hours a week, the model still helps you. You may not serve 200 clients. You may serve 50 clients in the time the old model allowed you to serve 5. The amount of time you have changes the size of the firm. It does not change which operating model gives you more capacity. You can build a firm around a handful of expensive, demanding engagements. You can spend your week personally producing custom work. You can hire people as the work grows and use more of the revenue to manage the organization. I think there is a better path for the small accounting firm. Build one standard service. Price it close enough to software that a small business owner would be foolish to keep doing the work alone. Use AI and connected systems to perform the repeatable work. Review the exceptions. Stay close to the client. Keep improving the plumbing. Serve more clients. Charge each client less. Keep more profit. That is why we are learning AI. Now that you understand the firm we are trying to build, we can learn the technology that makes it possible. In Series 2, we are going to back up and explain AI from the beginning. We will talk about language models. We will look at the companies that build them. We will separate the model from the product around it. We will explain agents, tools, harnesses, and pipelines in plain accounting language. You will learn what AI is good at. You will learn where it fails. You will understand why connecting the correct source matters. You will see how a model that knows the steps of a job becomes useful when it can read current firm data and act through the right tools. Then, in Series 3, we will implement the system with GrokBot and Ledger HQ. We will set up the bots. We will connect the firm. We will build and test the 10 automations that supervise bookkeeping across the book of business. The technology will change. Product names and buttons will move. The operating principle will remain. Build a standard process. Connect the plumbing. Let agents carry the routine work. Keep the accountant responsible for the system and the result. That is the AI accounting firm.